By staying focused on performance, Morguard Corporation recorded another year of achievement in 2015. Morguard again delivered strong financial results, which was made possible by our diversified portfolio, by the quality of our investments, and by strategic programs of acquisition and development. In 2015, Morguard's share of funds from operations reached $183 million. In 2015, our reporting was significantly altered because of the accounting change that required the consolidation of Morguard REIT's portfolio. Morguard's total revenues for the year increased to $884 million. And net operating income increased to $436 million, which was derived from our well-diversified portfolio of multi-suite residential, retail, office, industrial, and hotel properties. Assets under management is another important metric for Morguard. At year-end, Morguard's total assets under management reached $18.9 billion. Of the total, $8.1 billion are owned assets, $7.5 billion are assets that Morguard manages for third-party clients, and $3.3 billion includes the value of managed equities and fixed income. A recent purchase in Florida shows how one of Morguard's successful business models of co-investing with institutional clients has now been applied in the U.S. In 2015, Morguard and a Canadian pension fund client acquired for $56 million 2940 Solano at Montera, a newly constructed 252-suite garden-style apartment property located in Cooper City, Florida. This transaction represents Morguard's first mandate to manage a U.S. asset for a Canadian client. Morguard management devotes considerable attention to the quality of the company's balance sheet, and that includes prudent management of debt financing. During the year, Morguard refinanced $290 million of maturing term debt. That yielded approximately $406 million of gross financing proceeds at a weighted average interest rate of 3.11%. In addition, the company has credit facilities in place of nearly $350 million. At the 2015 year-end, Morguard shareholder equity was $2.7 billion, or $225 per common share. This increase represents a 5-year compound annual growth rate of 16%. Morguard's refinancing activities over the past 5 years shows how management has been able to take advantage of historically low interest rates. By reducing the interest rate paid on debt, management has realized significant savings for the company. Investing in the real estate industry is at the heart of Morguard's business. Contributing to its success are its stakes in 2 substantial real estate investment trusts, Morguard REIT and Morguard North American Residential REIT. During 2015, Morguard Corporation received distributions from the 2 REITs totaling $42 million. Morguard REIT owns a Canadian portfolio of high-quality retail, office, and industrial properties consisting of 8.8 million square feet of gross leasable area with a total asset value of $2.9 billion. In 2015, Morguard Corporation acquired approximately 2.5 million units of the trust for $41 million, raising its interest in the trust to 50.4%. Morguard North American Residential REIT was created to benefit from the demand for high-quality residential rental properties in key markets across North America. At December 31, 2015, Morguard North American Residential REIT owned a portfolio of 13,102 residential suites with a total appraised value of $2.1 billion. Morguard owns a 48.7% interest in the REIT. Morguard's offering of third-party real estate advisory services earned fees of $60 million. In 2015, Morguard attracted another major provincial pension fund as a new client and partner. Morguard additionally offers a broad range of proven investment vehicles and portfolio management services, specializing in publicly traded equities and fixed income securities. Morguard's investment in Lincluden in 2015 established a growth platform for equities and fixed income and provides enhanced products for Morguard's institutional clients. Additional growth was driven by property acquisitions. Since 2012, Morguard has owned Alta at K Station, a high-rise multi-suite residential property in Chicago, Illinois. Now, Morguard's presence in the Windy City is being dramatically increased with the addition of a major residential tower. The Marquee at Block 37 is located in Chicago's Central Loop neighborhood and will include 691 luxury suites in a 34-story tower. Morguard purchased a 49% stake in the residential development by leveraging its relationship with a U.S.-based investment principal. Several other recent transactions demonstrate Morguard's commitment to further diversify its portfolio by increasing its stake in hotel properties. In early 2016, Morguard acquired 3 hotels near Toronto's Pearson International Airport. This brings Morguard's direct hotel ownership to 9 hotels, located in high-demand submarkets within the Greater Toronto Area, with a total of 1,473 rooms. Also during 2015, Morguard increased its ownership in Temple Hotels to just over 30 million common shares, representing a 39% interest. Development of properties enhance not only the size but also the quality of the company's real estate portfolio. During the past 2 years, Morguard has transferred more than $310 million of properties under development to income-producing status. Those figures include the completion of Performance Court, the office development in Ottawa, Ontario, and the Heathview, a multi-suite residential project in Toronto, Ontario. The Heathview, developed and owned by Morguard, is a 30-story twin-tower complex located in Toronto's Forest Hill neighborhood. The Heathview recently received top honors as the 2015 Rental Development of the Year, announced by the Federation of Rental Providers of Ontario. Morguard has been awarded a mandate to design, build, and operate an ancillary services office building as part of the Etobicoke General Hospital's expansion in Toronto. And in addition, Morguard expects in 2016 to commence a major renovation of its 328-room hotel property located at 361 Queen Street in Ottawa, Ontario. In 2015, Morguard Corporation continued to be recognized for its accomplishments, including the quality of its development projects and its progress on sustainability objectives, as well as the talents of its people. Morguard's focus on sustainability has resulted in continual improvements across environmental, social, and governance indicators. Putting a spotlight on one of our major shopping centers helps demonstrate Morguard's drive to improve operational efficiencies and enhance the retail experience. Bramalea City Centre is the 4th largest enclosed shopping centre in Ontario, and in 2015 became the first super-regional shopping centre in the world to be named the Outstanding Building of the Year, an award presented by the Building Owners and Managers Association. Morguard management believes that diversification helps to insulate shareholders from cyclical downturns in a particular asset class or location and enhances the long-term reliability of the revenue stream. The company's portfolio of real estate properties is highly diversified by asset class and by geography. At the 2015 year-end, 72% of the company's real estate properties by value and by net operating income were located in Canada and 28% in the U.S. Morguard Corporation's overall portfolio of properties highlights not only its size, but also its diversification by types of asset. In total, Morguard's portfolio at the end of 2015 included 173 real estate properties worth $8.1 billion. There are 56 properties of multi-suite residences, 69 office and industrial properties, and 42 retail properties, including major enclosed shopping centers. At year-end, there were also 6 hotel properties, now increased to 9 by 3 recent acquisitions. For Morguard management, an important goal is the long-term growth in the value of the company's shares. Over the past 10 years, the compound annual growth rate is 16%, which is a validation of management's strategy to build a strong, conservatively leveraged company.